80% of brokers' retail clients lose money. What do you reckon, true or false? Well, unfortunately, it's a very true fact. So many traders these days are losing money. I say these days, they probably have for a long time. The only factor is now that brokers have to give their data in terms of their win rates. Now, this doesn't just include retail traders. I'm sure there's some bigger traders in there. There's some traders which are trading other people's money for sure, because from what I hear, there's a lot of other people's money being lost as well as retail traders. Now, who of you really want to be in that sort of top 10% or maybe 15? You've got to remember, maybe even the 5 to 10% there, people may not be losing money but not making anything significant. You see this all the time. This time next year you'll be a millionaire. 0 to millions. I can't remember all the names of the different people that I've been shown videos of recently, but you won't be if you're only trading a £10,000 account or less. Maybe if you've already got a million, yep, you may be hanging into your million, but you need to have a lot going for you if you're going to be successful in this market. The problem we have at the moment is great expectations. These are largely brought on by the hype of the built up by the super scammers. You've seen them, the videos on YouTube here. They get out their Bentleys with their massive watches on, waving wads of cash around. Realistically, I've never known a good forex trader yet to be waving wads of cash around. For example, they may have a nice watch, maybe a nice car somewhere, but they certainly don't put them all over YouTube and start flashing around too much. Too many companies offering you the chance to get rich quick is the disaster, and this is what causes that 80% loss rate, in my opinion. Most traders that join us are not focused on being a millionaire. Some of them may be millionaires, but what they're actually looking for is an income, a change of circumstances, something slightly different to what they've got now, and it may be even with some of them the chance of building some sort of bigger pension pot. For many people, the focus is completely wrong. It's money rather than process. Now, I'd like to phrase this a little bit better. This time next year, you'll be better if you do the right things. The focus should be getting good first. Now, many of you may have read the book Outliers, The Story of Success. 10,000 hours of practice gives the top people in their sport, in whatever they're doing, it produces the best. There's some facts that may spoil this a little bit, but in reality, if you're spending that sort of amount of time on something, you're going to be successful. It's around about 6 years of working at it full time, effectively. Think of a doctor, an aircraft pilot. It's not all in 5 minutes. Okay, some of these things are a bit quicker than others, but in reality, success takes time. Personally, I've done close to 40,000 hours and I'm still learning. I totted it up the other day. The problem is I've probably spent about 30,000 hours of those learning what not to do, which in a sense was still learning, but there was many a chase of holy grails, etc. within those 40,000 hours. Now, when it comes to targets that these guys suggest and whatever else, it's great. Break them down. Make sure you give them a reality check relative to your funds. If you're trying to make more than sort of 10, 15, 20% a month regularly on a bigger account, it's probably not going to happen in reality. If you want to be 10,000 to a million next year, probably not going to happen in reality. Look at how big you've got to grow that so quickly. You may be, you may as well do the lottery. It may be a quicker route of doing it. You've got to ensure you give yourself a reality check. So often in these markets, I hear technicals are all that matter. The idea of looking at fundamental analysis is poo-pooed. Of course, it's false for many big traders. The majority of educators I see and hear out there teach technical analysis solely. They're not interested in teaching you much about the fundamentals. They may give you some silly historical fundamental or economic cycles, but in reality most just teach technical analysis. The majority of banks I've seen use fundamental analysis. Ever been on a banking floor? Not many charts around. The best traders, and we've got the opportunity to do, is to use both. Fundamental for bias, get an idea of what the banks and the money is doing. Technical for setup and triggers. Yes, we can go against the bias on technical analysis at times, and yes, it will earn us money. But think about trading with the money and increasing your odds. Put more stakes on the fundamental bias, less stakes against it. Hey, imagine this then. This is how the bank trades, the bank look at money, and this is the fundamental. Okay, central bank changes. This is the Euro zone in blue, and red is the Fed. Now the Eurozone back in Aprilish 2014, eventually Draghi admitted they may have to do something. You see, that was the top of the markets of the euro at that time. It started selling off. They made a cut next time they met. That obviously was also suggested there may be more cuts ahead. A little bit of a cut and a bounce, but there we are. It was probably priced into the market initially. Of course, he said it was going to happen, but a week later it sold off again, and a few weeks later it was selling off strongly. So the bias at that stage was negative. If you're trading in this market on the negative side, look at where the biggest, longest bars are. They're not big green bars. Sometimes you get the bounces, which are really effective. But in the majority, when things are changing like this, the trend, the bias of the fundamentals to the downside. Further cut came, and then we went to zero interest rates. But by the time that came, it had been spoken about so many times, it was almost inevitable that that was going to happen. So by the time it did finally come, the markets did actually breathe a sigh of relief. That was it then. Okay, they couldn't do too much more. So there we saw the market bounced around a little bit, gained a little bit. The people compared, and the fundamentals would have been compared against the US and the euro, and is this at fair value? And we spent quite a lot of time chopping along. Even when the Fed started their tightening cycle, they discussed it back October, November in 2015. It started happening. What it happened immediately that week, it dropped back down again, but it wasn't long before it pushed back up. Just patience there. It pushed up, the dollar strengthened. But as everything else happens, other things were happening. Inflation was suggesting it wasn't that particularly strong in the US, but they were carrying on with their tightening procedures. Changes were suggested again, and again they made cuts. Increases rather, in this case, increased further. Now, so it's really weird. You see this increase, and this time it bounced. Well, there was a significant focus on US interest rates, and the belief that these rates wouldn't keep being able to continue for too long. Well, the price went up, as you can see. At this point here, as the fundamentals were changing, the US inflation was low. You're looking at other numbers. ECB was announcing reduction of quantitative easing, so they were helping their own situation. They were suggesting they were going to get back on par. So if things leveled up a little bit more and moved back towards the euro hand. Now, if you looked at what the big money was doing, I always look at the COT reports. Unfortunately, they're rather out of date at the moment, but coming there, getting better, nearer and nearer to being up to date again. But whatever have happened, if you look at the top shelf here, top chart here is the price action. If you look at what the big asset managers were doing in blue, well, they'd already sold off before it got to the top. They're never late. They're always a bit early in their moves. Their analysis is possibly a bit too strong. Sometimes they miss out on the tops and bottoms, but who needs all the tops and bottoms? The hedge funds, the leveraged money there, look, it's sort of much more aggressive. It follows the price of action quite to the point, really, and changes as does and as and when the price level changes. They're much more on point effectively. But you can see what they're doing. Okay, bigger guys, asset managers, are they looking at charts all the time? Not particularly. They're looking at the fundamentals of what's going on there. Okay, they started buying in and became net positive back in 2016. It took a year for the market to change back up to the 2017 time when it started getting more significantly positive. Meanwhile, the asset fund managers are slightly on line with the curve of price action, and eventually picked up, went quite more bullish mid 2017 there. But you can see they were more in line with the price action. They do their analysis. Whatever you do, check the news is coming out. If you're a day trader, you may say, well, I'm only day trading. Why do I need to look at fundamentals? Again, it comes back to bias. You can have a better opportunity, better chance in the main of trading with a weaker euro or stronger euro, whichever way the fundamentals is pushing us. Whatever you do, check when the news is coming out. I've known people to come into our trading room and say, what happened just then? Well, it's not fun payrolls. Oh, okay. Okay, the next move, the myth, I'll tell you now it's a myth. You have to have a high win rate. Of course that's false. You don't need to have a high win rate. And this is where so many people probably go wrong. Me included in the very early days. As I said, I've spent many hours trying to analyze and find high win rates. It was most important. I'll come on to what I do like now, much better than a high win rate, but there we go. We trade to make money, not to be right. That's where we should be looking at. All we need to do is make money. Doesn't matter how we do it. What is important to make more money on your winning trades than you lose on your losing trades overall. Important factor. Traders can still be very profitable on a 30% win rate. You don't really believe me there, I can tell. So I knocked up this return ratios chart. So this is the wins and loss, the risk reward effectively. So if you're winning 2, losing 1, we'd call that a 1 to 2 normally, or 2 to 1. That's actually how we actually call it, and then we draw it the other way around quite often. But anyway, so there's your win rates relative to your loss rates. 20%, you can actually make money if you've got a constant flow. I say constant flow, enough 5 to 1 trades coming along. As long as you stick with it with a 20% win rate, you're going to be making money. 30%, much more easy to make money, and so on. The rest, I mean, the 70% at a 5 to 1, you're unlikely to get such a lovely thing. Okay, I've taken someone's account. Now, Charlie had put this on YouTube a long time ago. It's a young lady's account that she showed us last year, I think it was now. Well, it would have been last year. And at the time, Charlie just pinpointed the very fact that you don't have to have a high win rate. In fact, he was sort of pointing out the whole picture here, and I'm just going to pick out what I wanted to show you. So this trader, gross profit up here, where is it? Over there, 168464. Actually, it may be 444. I may have made a mistake there. I did make a slight mistake there. Gross loss, I mean, I was talking about 40 quid, or 20 quid even. Gross loss, 122. Now put this a different way. You're running a business. Your cost of your turnover, 168,000. Your losses, 122,000. You made a profit, a net profit there, 46,000. You'd be pretty happy with that. That's a good return on your money. However, why as traders do we look at the bottom line, look at these profits and losses and think, oh crikey, I've lost 122,000 there. It's how we look at it. It's how we program to expect because of the stupid marketing that so often goes with trading. It's not like that. This is more reality. On this particular account, it's not shown here, but you can go back and watch the video on our YouTube channel. It's way back. I may put a link to it on the bottom of this one. She had an open profit there of around about 40,000 in addition to have netted closed 46,000. Worst case scenario, well, she could have lost the 40 grand, but she still had the 46 grand there. So she had actually had a net positive position of 87,000 and £80, not 105. Profitable trades were 34.27%, not 70, 80, 90, 34%. Okay, largest profitable trade 3,188, largest loss trade 842, average profit 420, average loss 159. You can see where she's coming from here, can't you? She got to the point where she didn't really care about losing. I spoke to her recently and she said, it's just another loss now. If I have a losing month, I have a losing month. In December I had a great month. Just January I had a less a good month. I didn't have such a good month. What do I care? I know I can make money in the long term. So, next question then. You have to know the probability. Well, in fact, it sure helps. True, I would suggest you need to look at what the probability. It's no good just hitting and hoping. You could say, well, I'm going to try a 90% win rate with 5 to 1. Well, you won't know what the win rate is unless you test it. It's important to understand what the likelihood of a target being hit is. You need to test. How can you estimate what the risk reward is with any confidence whatsoever without having checked? This requires testing and continuous monitoring. Now I'm quite impressed. We've got some traders within our trading room, which one of them recently quoted me a whole number of stats, and I said, well, you could have got those stats. I'd already done them, and they're kept up to date on a particular site. We keep for those particular stats. And he said, well, sure, but I wanted to do it for myself. I wanted to check. And it built the confidence of the chap, and I can only take my hat off when someone's okay. We've provided the data because that's what I'm trading with. So I keep it updated, but this guy wanted to do it for himself. Brilliant. That's the part of the 10,000 hours in there. Yeah. Okay. So as a day trader, you need to sit in front of the screen all day. Is that true or false? Yet another myth. It's false. Of course you don't. You can sit there and scalp if you like, for a few pips here and there. But even so, even for the scalping traders out there, the ones I know that are half decent, they would be trading between these periods when the market moves the best. So generally, I'm talking UK times here, so bear with me, GMT, it's around about 8 till 10 o'clock in the morning, and probably 11:30 through to about 2 o'clock in the afternoon. They're the sort of best points. Sometimes you get a better move about 3 o'clock in the afternoon. The afternoons have moved around a little bit, so I'll keep that open to when the markets are actually moving. But we get points in the market where it's more volatile than others. All brokers offer great accounts these days in terms of which allow you to set stops and limit orders and leave the trade alone. When we very first started, we didn't have such decent accounts and very simple accounts to use too. The other thing of taking a trade and walking away, it's funny, my young lady laughed at this when she saw the slide. I said it reduces the fiddle factor, and she laughed at the fiddle factor. Well, the fiddle factor is the point at which you must go in and you think you ought to. You're sitting there watching a trade minute by minute, tick by tick. You think, I better take some off there. Oh, it's run into something. Walk away, leave it alone. Finally then, are there any shortcuts to the success? It's almost a myth, I think, but maybe there are some shortcuts. We will offer you a shortcut for sure. I've talked about the 10,000 hour rule for the best. What I should have said, those people that reach the 10,000 hours, they're very unlikely still to be the best unless they've got someone pretty good beside them, giving them guidance and support. And that's what we do. We provide guidance and support. We provide you with an edge. You need an edge. It's some sort of probability in terms of what you're doing. Now, I spoke to many traders recently, and when I presented this as a presentation recently, that told me all about their different setups and whatever else, and I was scratching my head to work out what they were actually talking about, because I can only look at pictures, and when someone's describing something, it was la 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 to me. But anyway, they had an edge, and that's what all I said to them is, "You've got an edge? Great, that's your sign of probability. That's you need. It don't need to be the same edge as me. You can have anything you like, but you need some sort of probability to what you want to do. You need to get your head right." And I could, well, no, I wouldn't. I'd let Charlie do this. Get a whole video and getting your head right. And I'm sure he's done plenty of these before. You need to get your head right in terms of trading. Some of this would be done by the very fact that you've done your analysis and you've spent some time in the markets and you're doing it with real money. There's little point doing it with demo accounts, because you'll never get your head right until you use real money. So you need to get your head right. As I said, you can increase your likelihood of success with the right people. Now I'm going to put a link on after this video. And I'll put the link on the bottom here as well, and at the end of the video, for you to come and share a couple of days with you. So I'm going to flick this next screen quickly, because all I want you to see is our trading room. Our trading room looks like this. You've got who's in. You can see our charts. We'll talk about our charts. We can talk you through. We can show you pictures. So even like me, for people like me that likes to see the picture, and really when someone's doing something, it's really going la la la, I don't understand what you're talking about. But here you've got pictures, all in pictures. You can see what other people are saying. We add announcements. This isn't a tipping service that we offer here. It's an aid service to help you understand how we take trades, how we manage movement, etc., and what we're looking for. In this particular case, shorted cable in the early morning there, 8:17. 9:28, I was stopped on it, looked at it a little bit longer. It was just a bit of news, unfortunately. I think on that particular occasion may have just blipped us out, but I was quite happy with the original setup. Re-entered. We took 20 pips off relatively early, and then we left it, walked away, came back. I looked at what was happening, adjusted the target slightly because something I hadn't realised had been coming in there. So we just adjusted the target to 29.85. So just a touch of adjustment, and then the target was hit 55 pips, and that was it in that particular day. But I would talk to people through. It didn't matter what this was. It may have been a 20 pip win, full stop. It may have been less, may have been a loss. We had losses as well, but we talked through the methodology we use for everything. So if you want to join us for 2 days, there will be a link on the bottom of this YouTube video in the text there. Do click on that and come and join us for a couple of days. Okay, so they're the myths in the whole of trading. So in summary, let's just run through this. There is a high rate of losing traders for sure at the moment. It's not a quick fix. You need to put some time in. Keep away from those guys that have given you the sort of do it quickly, pile it up high. A win rate of 30% plus can be good enough to trade. It's a business. Think of it as a business. If you had a return of 30% on a business, you would be pretty happy with that. Probability is important. You've got to understand your business. You've got to understand what is achievable. You can place your trades and leave them. You can walk away from your computers. And we may be able to help you trade in that top 10-15% of traders. Join us for a couple of days. The link's below. Take care.